Hello again, everybody. Doing here from DRFX Forex Swing Trading. Taking a look at the Aussie Kiwi dollar, which we haven't looked at in a long time. Here we see that the market has actually been in a very sharp uptrend as it attempts to start a new uptrend and gradually take out these downtrend lines. As you can see here, we have about two more trend lines for the market to take out. So following this brief period of or this extended period of sideways movement, we could actually see the market head towards these remaining trend lines to resume its attempt to start an uptrend. On the other hand, given the strength of this downtrend, we could actually see the market break below this area here to resume the downtrend. So that is always a possibility once we have trend lines that are still in place in the more dominant trend direction. So we're going to have to wait to see where the market is going to break out from this sideways pattern that we see here. Closer look. Sideways movement has taken the form of this pennant setup that has been gradually taking shape since July of this year. As you can see here, this included spikes along the way as the market created these boundaries of resistance and support. So right now we're at this trend line and we could see the market break above this area here to attack this one of the two remaining downtrend lines. On the other hand, given the fact that we're actually in a more dominant downtrend, this could be a brief period somewhat and could be an indication that the market is going to resume the trend with a bearish breakout below support. So we're going to have to wait to see what takes place. Again, the principle of consolidation breakout would govern how we trade this breakout. We're going to have to wait to see if the signal is in sync with what we normally expect when it comes to consolidation breakouts. And we're going to need both a combination of the right setup and the right signal in order to be confident enough to be able to trade the breakout in whichever direction it takes place. So bearish or bullish, the signal has to be in sync with what we normally expect when it comes to a profitable breakout. So we don't want to get caught in any false breakout setups that leads to unnecessary losses. We're going to have to focus and wait until we see the right signal and then trade accordingly. So right as it is now, trading within this is going to be very risky. As you'll notice, whenever the resistance and support boundaries begin to narrow, it's normally an indication that the market is getting ready to break out. In addition to that, the market generally becomes a lot more volatile, making it a lot harder to trade within these boundaries. So a person on the 30-minute and 15-minute or even the 4-hour chart would now be experiencing a much more difficult task of trading within this boundary. So we're gonna have to wait to see what takes place at this area here, bullish or bearish, and hopefully the trading signal is gonna be strong enough and in sync with what we normally expect for consolidation breakouts.